So we have been getting a number of questions from clients about the new Trump accounts that will be coming out here later this year. So in today's video, what we plan to do is we plan to cover some of the basics on how do you get free money into the Trump account? How can you add more money? And what are the smart things to know about when this type of account makes sense and when this account may not be the best tool for you in your financial situations. With that, welcome to Cup of Bull. My name is Michael Dunham. I'm the director of planning here at Fontana Financial Planning. And with me today is Patrick Fontana, the founder of Fontana Financial Planning. Welcome.
Hey, cheers, Michael. Cheers. Welcome to Cup of Bull. Okay, so I'm going to kick things off with a couple questions. Michael did some research here, and we just did a little briefing on what's good and bad and everything about the Trump accounts. And so I'm going to fact check and follow along and clarify questions. I'm going to pass to Michael to explain how this works and how to take advantage of it.
So with these Trump accounts, the first thing to know, that I'll say the most common question that we're getting from clients right now is, what's the free money and how do I get it, right? And so any child that's born between 2025 and 2028 is entitled to a free $1,000 that will be seeded into the Trump account by the US government. Now, there's a couple things to know about that. One, the Trump accounts have not actually been issued yet, so it's not possible to actually go set up a Trump account right now. So it's set to go live on July 4th of this year. I'll caveat that, with anything related to the government, that may or may not be the actual date, but as it stands right now, July 4th is when these accounts are set to go live. And if you have already had a child, so if you had a child in 2025 or early on in 2026 and you haven't filed your 2025 taxes yet, you can file what's called Form IRS 4547 as part of your tax filing. And that is what will allow the US government to know that your child is entitled to one of those $1,000 seed deposits in the new Trump account.
So we noticed, or kind of you pointed out there, what IRS form number was that?
47.
A little Trumpism, I think, they being sneaky there. And then the funding date is July 4th for those that do it. So what is the case where this makes the most sense? Or maybe give us an example, like we talked about, of where it's appropriate and where it may not make the most sense.
Yeah. And I'll say this kind of ties into the next most common question that we're getting right now is, should I set one of these up for my child or grandchild, and how should I use it? Right. And so a couple of things that I'll say are really important to know about that. So you get the $1,000 seed deposit from the government. From there, families have the ability to add up to $5,000 per year for any beneficiary. And the way that $5,000 gets treated, it can come from anyone. So it can come from parents, grandparents, other relatives. Anybody can put money into a Trump account for a child. It's not a tax deduction for the person that puts it in. So it goes in as what's called non-deductible basis. And then that basis must be tracked every year for the rest of the child's life. So essentially, if you put in $5,000 a year for a couple years, and let's say you do that for 3 years, and you've put in a total of $15,000, and by the time the child turns 18, that $15,000 has grown to $40,000. As long as you've kept proper track of that, the IRS is really looking at two things: the $15,000 non-deductible basis and the $25,000 of earnings. And they're going to be treated a little bit differently at that point in time. So the child turns 18, the account becomes what's called an IRA account. So the money will move into an IRA account for the child, and then it'll be subject to the same IRA rules that anybody else is subject to.
So to clarify, what could be bad about that is when you have an IRA and you're not old enough, which is 59 and a half, you pay income tax and a 10% penalty, right? So if somebody did this with the purpose of buying a car or paying for college, that's where this would have a downside and be potentially a bad move, right?
Yeah, that's exactly correct. And I'll also bring up, we run into this all the time where people don't know about their non-deductible basis and they don't know that they're supposed to keep track of it. And it can be one of those things where if you do it, but then you don't keep track of it, you end up paying taxes on the money twice. So you could put $15,000 in, but then if you didn't properly keep track of it, the money gets converted to an IRA, and now all $40,000 of it becomes subject to income taxes and potentially a 10% penalty if it doesn't qualify for one of the exceptions, which I'll say for young ones who may need this money, really the two big exceptions would be education. So you can take money out of the account to pay for qualified education expenses, and that's an exception to the 10% penalty. So you still have to pay income taxes, or the child does, but they don't have to pay the 10% penalty. And then first time home purchase up to $10,000 is the other one. But as you said, like kid needs the money for a car, they take the $40,000 out, they buy a new car, they're going to owe income taxes and a 10% penalty on that $25,000 of growth in our example from before.
So let's lay out advice-wise the smart way to potentially use this applies to less people than you'd think, right? So I'll put you in this case. You're about to have another child. Your son Trip was born too early, as all my kids were, so I'm not eligible to any of that free money. So your daughter's born, you open up one of these, you get the free money from the government, and then you fund, in that example, you fund $5,000 a year for a bit of time, $15,000 goes in, it grows to 40. Is the upside would be daughter turns 18, 15,000 grew to 40. She's in college. She's making no money. You have the ability at that point to take an IRA and convert it to Roth and basically not pay taxes because she doesn't have any money, not have any income. Is that the scenario where this thing kind of plays out in its perfect course?
Yeah, that's the biggest opportunity I see for it. And that's where I'd really say, like, the question of should I take advantage of a Trump account really comes down to the goal. And if you are already taking care of college elsewhere and you've already got everything else covered through other means, and you're looking for another opportunity to maybe really give your child a head start in life, that's where this can be really cool. Is the example that you laid out, Patrick, of my daughter, she turns 18. We have a $40,000 now IRA account. We could take 20,000 of it in her freshman year, convert it to Roth, and she would fall below the standard deduction as it sits today in that example. And then her sophomore year, take the other 20,000, convert it to Roth. And then when we're done with that, she has $40,000 in a Roth IRA that's tax-free for the rest of her life. And she's potentially not worked a day in her life. And that's where it can be really powerful. But I'll say it has to be the right kind of person and in the right type of situation and looking to be strategic and take advantage of that. And the cases where like the money is going to be needed before the child turns 60, I'll say like this may not be the best solution for those people.
So we've done a fair bit of this. I'll use my kids as an example where I'd say there's better wrappers for some of these other goals. So paying for college, there are better wrappers. When I say a wrapper, a better account to grow and put that in, a 529 plan as an example. Or paying for a kid's car at 16 and helping them kind of get started with things, a custodial account is better. If you are a business owner like we are, and you can pay your child or they can earn some money and have the ability to fund Roth IRA, that's a better route, right? So you can potentially have a pre-tax to your business, some of that money, fund Roth IRA that you don't need to convert later at 18. I know we've got several clients that have custodial accounts for kids, and we make it a practice to make that phone call when they're in college, say 20 years old, before they're about to go take a job and make good money. And that's where we'll look to sell their investments to realize that gain and not pay taxes and kind of reset the basis before they're off with life. So there is great wisdom here you've given on, here's the nuts and bolts. It's $1,000. Let's have you give a little recap of the highlights of the Trump plan. You can't do it today. Like, you're not behind the 8 ball. If you had a child before 2025, you're out on getting this free money. But if you have a kid last year, 2025, or this year, 2026, during this 4 years or so, you can, more details later, but you'll be able to open it. The tax form was Form 4547, which I think was a internal nod to Trump's presidency numbers. And July 4th is their target date of when they're looking to kind of kick this thing off.
Yep, that's absolutely correct. Only thing I would add, you can open a Trump account if your child was born before 2025. You just won't get the free $1,000. So Trip, for example, is about to be 3. We can open one for him. We just won't get any government seeding for doing that. The other thing I will add is it depending on where you are, there are companies, there are individuals have made offers to provide additional seeding capital to these accounts. So for example, here in Texas, Michael and Susan Dell made a very large gift. I want to say like $6.5 billion, where certain people who live in certain low income parts of the state of Texas will get an additional $1,000 put into there. So there may be other free money outside of the government money, and that's really going to be location specific or work specific, but there may be other opportunities to take advantage of there as well.
So how do we want to close off our brief Trump briefing on how the Trump accounts work?
Rebalance for life early on and often.
Early and often.
Cheers.